Chapter. So I am Jackie Turreff. I am the VP of Financial Assistance in the Meals on Wheels program at Jewish Family Services. We want to welcome Kristina Ray today from Truist. She is going to be doing a presentation for us on budgeting and banking. So a little bit about Kristina is she is a community financial wellness leader. She's been helping to change lives in the community through Truist Financial Wellness Program for almost 5 years now. Her passion is to positively impact the financial well-being of those in her community by being an essential resource and partner. As a first-generation graduate, this is especially important to her because she was raised in a non-financially stable family and overcame so many hurdles with a little bit of help from great resources and partners. Every interaction she makes with our community is an impactful experience as she's helping our community gain back their financial security. Through Truist, she is able to bring the community the financial knowledge, digital tools, and resources needed to be financially successful. So Kristina, I will have you take it away. We look forward to hearing you tonight.
Perfect. Well, good evening, everyone. My name is Kristina Ray. Like she said, I am a community financial wellness leader with Truist. I know some of you may not be familiar with the name Truist. So for those of you who do not know, BB&T and SunTrust actually merged together to create a premier financial institution. Now, this institution is a purpose-driven company, and our purpose is to inspire and build better lives in communities. One of the ways that we live that purpose every day is to be able to connect with you through Zoom, in person. You know, my job is really that of a road warrior and sometimes a computer warrior as well. So that's kind of a little bit about Truist, what we do, how we kind of make that work. And like Jackie said, I have been able to connect with the community through banking for almost 5 years. And one of the most important things I've learned is that the right bank matters. I've learned that the right bank will connect you with the resources that will help inform you of financial decisions, and the right bank will connect you with the tools and resources to help you take those actions. I believe Truist is a bank. I have been honored, like I said, to do this purpose for 5 years, and my goal is to share with you why we believe this and start your relationship with Truist and your local banker as well, so that you guys can have access to, you know, not only our WebEx, but if you need a little bit more in depth, we do provide that as well. And it's complimentary. It's for the community. That's what we're there for, so that you don't feel that you have to make this financial journey by yourself. So I'm going to go ahead and share my screen. Right. And let's see if I can navigate this. Start from the beginning. Okay. Can everyone see my screen? Okay, perfect. I see a couple head nods. Then we're in the right direction. Okay. So this is my information. I will throw this back up at the end because I usually have a couple people who want an email, a phone number. The great news is I don't have standard banking hours. So if you need to reach out to me because you work the traditional 9 to 5, you can reach out to me afterwards. I do things like Zooms at 7 o'clock at night. So you can feel free to email me, text me. This is my direct contact. So a little bit about our purpose, like I said, is to inspire and build better lives in communities. And okay, here we go. So this is a 3-step process. Today, we're just going to learn banking basics and then assess your budget and savings plan. Determine your financial situation. 1, what you spend your money on. 2, how much money you earn each month. And 3, how much disposable income you have. Let me see if I can move this out of my way. Okay, sorry. Directing my screen. All right, so there are 3 different types of people, and this is kind of how this conversation goes. Where does my money go? So some people will say, well, I kind of know where my money is spent. I look at my checking account every day to see what my balance is, but sometimes I'm not aware when a check or a debit transaction clears. I'm not that great at it. That would be me. The second person is, I figure what I don't know won't hurt me. I used to track my spending and I was stressed out all the time. So now I just don't worry about it. I think that's a large population. So well, it's not really a fun fact, but a fact. Statistically right now, more than 60% of Americans cannot afford a $400 emergency. So if your air conditioning goes out, and I'm in South Florida, I'm assuming you guys are all in South Florida as well, that is a big emergency. And that's a little bit more than $400 usually to fix. But a lot of us aren't able to fix that, a $400 emergency. I will also share that I was that statistic. I was the person, who was a single mom scooting by trying to figure out how to make my ends meet. I was, nervous to go cash my check because I'm like, oh my gosh, I know my bills are going to go out. And as soon as I cash this check, I'm going to have almost a zero balance. And I certainly didn't have a savings. I had a savings account that was collecting cobwebs, but I certainly didn't have a savings. And the third person is, I balance my accounts to the penny. It takes a few minutes a day to download and categorize my transactions. That way I know where I stand every morning before I leave work. Whoever you are, if you are this person, you need to be in management, you need to be running a business, because I commend you. I am still not this person, and I do finances for a living. So this is a great statement, but for some of us, that's just not realistic. All right, tracking your expenses. This is just a little chart, and Jackie, I can definitely get this out to you, or if anyone would like their own, you can email me or put your email in the chat. You can put it as a direct comment so others can't see it, and I can send this out to you. But I will say, when you're forced to write things out, it becomes more of a reality. So when people talk about budgeting, I always tell them, well, let's do it old school style. Let's write it out. Let's see what it looks like. Because when you have to go through your bank statements, when you have to go through your app and write down every purchase, it becomes a reality. I try not to know how much I spend on Amazon or at Publix, because then I have to come to terms with, girl, you need to budget a little bit more. Especially these days, with everything going up and up and up in pricing, it's definitely hard for us. It's hard for us to figure out how to budget. So writing it out, you have your personal and the family, which is daycare. My children do not get allowance, but if you have that, clothing, shoes, child support, laundry, donations, entertainment, food, groceries and household meals out, debt payments, auto loan, credit card, department store credit cards, student loans, personal loans, debt payments, and then household rent, mortgage, property taxes, insurance, homeowners associations, dues, gas, electric, water, trash, telephone, home maintenance, cable, internet, and other. All of these, and you don't have to fill out one for everything. So if one doesn't pertain to you, that's okay too. All right, determining your disposable income. Disposable income is your total net income minus your total monthly expenses. So what are your financial priorities? How do we create priorities? What matters most to you? Knowing your financial priorities helps you create successful financial goals that are aligned to your vision of the future. If you don't have that vision of a future, even if it's a small goal, you have to, because we don't want to work just to feel like we're working to pay bills. Set a goal for yourself, whether it's something small. I always tell even my high school students, my college students, I tell everyone, make sure that first thing you do when you get paid is to pay yourself, whether that's just depositing a little bit of money into a savings account for, a future goal. Maybe it's to just set aside an emergency fund. Treat yourself, because sometimes we get into that, rut of just working to work, and then you don't treat yourself, and you're like, well, what am I working for? Because I just feel like That's my day. Working, come home, repeat, working, come home, repeat. So it is very important for your mental health and for yourself to treat yourself, even if it's a small treat. I told somebody one time, get that slushie at the 7-Eleven, like it's something small, but it's a little treat for yourself. I'm not saying go and spend, $120 on some shoes or anything like that, but give yourself a little treat, give yourself something to, kind of treat yourself for the hard work that you're doing. All right. How would you spend $100,000? I always like to use that too in some of my presentations. I always like to start off with, if you won the lottery today, what would be your first financial move? You can put it in the chat. You can take yourself off of mute. Who wants to go first? Jackie's like, a vacation with covered daycare.
Yeah. A nice vacation would be good.
That's right. Dina, what about you?
Somebody wrote in the chat, pay off mortgage.
Excellent. Okay.
Vacation and pay of credit cards.
Perfect. Okay. All right. Yeah. See, so again, it's small goals, but you have to have financial priorities. You have to have some goal in mind, or it just becomes repetitive. I always tell people, because we always make, who remembers their first job? I try not to remember it, but I worked at McDonald's, and I'm probably going to age myself just a little bit, but the minimum wage back then was $5.15 an hour. And that was my first job. And I always told myself, okay, well, when you get $10 an hour, you're going to do some big things, girl. You're going to get a nice car. You're going to do great things, right? So then I got that $10 an hour job. And guess what? I was still not doing big things. And then I got a higher paying job. Still didn't make any moves. You guys, I didn't start actually understanding budgeting, understanding my finances until I was almost 30. Like I said, I was that single mom. I was barely scooting by. I had no savings. I had the 520 credit score, y'all. I was real prepared. Had no 401k, no IRA. Like I had nothing planned, nothing, but bills were paid. I had a roof over my head. So I say this to let you know that even if you have that higher paying job, if you're still doing the same navigations with your finances, can I just tell you, we have doctors who are great at their practice, but are going bankrupt because they don't know how to manage their money. They know how to fix boo-boos. They know how to tell you have a common cold. They know how to do surgeries, but they don't know how to manage their money. And they're going bankrupt. So it doesn't matter if you make $5.15 an hour or if you make $200,000, a year. That part doesn't matter. It matters what you save, what your finances are, what your financial priorities are. So what can you cut from your daily expenses? What are your financial priorities? Just some questions to ask yourself. And I think okay. So we have something called setting SMART goals. SMART means specific, measurable, attainable, relevant, and time-bound. So create short-term and long-term financial goals. Short-term goals are to be set for the next 6 to 12 months. What do you want to do this year? What's a financial goal you have for yourself? We're in March. We still got quite a few months for the rest of this year. And long-term goals are more than a year from now, but less than 10. Creating short-term and long-term financial goals. Where do you see yourself in 1 year? How about 5 years? And in 10 years? Break down your long-term goals into short-term goals so that you know what steps to take. I always use this analogy. Would you start a 5K right now if you didn't know where the finish line is? Why? Why wouldn't you start 5? Won't your legs tell you? Right? Oh, it's 5K. You're good. Stop. No, why not? because you need to know where your starting line is and your finish line, right? If not, we'll just keep running, or we might not run long enough, or, you know, something like that. It's those things that, you know, we really don't look at when we think about our finances. We don't think about health. We don't think about goals. We just think, I just need to make it work, or eventually it will stick, right? Eventually I'll get to where I'm going. Eventually it will make sense. Eventually I'll get there. But if you don't start those goals, if you don't have a starting point and a finish point, then you're just going to keep running and you'll get burnt out and you won't know where your finish line is. So make sure for your 10-year goal that you break it down in 5 years and 1 year. That way you know that you're on track for all of those goals. All right, and basic banking. Some of this is a little redundant, but I always assume that people may be in the same shoes that I was 8 years ago, where I didn't even know what interest rate was. I didn't know what a line of credit was. I didn't know that my savings account, no matter where I banked, if I went into my savings account more than 6 times, if I did a transaction, whether it was putting money from my savings into my checking or withdrawing from my savings, if I did that more than 6 times in a month, I was being penalized. I was being charged. So when I think of basic banking, some people may be like, well, I already know this. Why are they teaching this? This is very, you know, elementary. This is no, what may seem like common sense to some is not always common sense to all. Some of us, like, you know, Jackie said, I didn't come from a financially savvy family, so I didn't know what some may consider banking basics. So it's a very important topic for me. And I always assume that maybe someone, you know, on one of my calls, maybe somebody in my audience is the same and doesn't have that. So if this seems a little elementary or anything like that, it's just because we care so much. We want to make sure that even the smallest of things with banking is a piece of knowledge that we give to the community. So a checking account is a powerful budgeting tool. A checking account is one of the best ways to control your spending. It's safer than using cash. Checks and debit cards provide proof you've paid someone. Deposit and cash checks are free. Using a checking account to make payments, check your balance, and you use a checking account to make payments, check your balance, and transfer funds. And also you use a checking account to get a digital record of spending and categorizing transactions. All right, which checking account is right for you? So I always ask, you know, my audience, do you know if your bank is charging you monthly fees? And I will tell you, 98% of my audience is like, I don't know. I really don't know. So don't be alarmed if you don't know, but make sure that if you set up your checking account years ago, because we probably all opened an account at 18 and probably still have that same account, because I do. I opened a checking account in Jacksonville because I was like, Mom, where do you bank? Okay, I'm going to bank there too. I didn't know what questions they were asking, probably don't even remember. So I too didn't know if I was getting charged fees. So make sure that you are not getting charged fees, or if you are, if there's a way that you can, through certain qualifications, alleviate some of those fees. The basics are interest on balances. Are you paying interest on balances? Monthly service fees, branch locations, overdraft options, electronic banking services. Does your checking account appear on an app? You know, do you have free online banking with Bill Pay? My gosh, sorry, I'm a little dyslexic at 7:30. Do you get email alerts, balances, transfers, payments, deposits? Do you have free mobile banking? Do you have mobile deposits? Can you do person-to-person payments? Example, Zelle. Are we all familiar with Zelle? Okay, so Zelle is a transaction through banks that actually protects your account information. So you really only need the phone number of the party that you're trying to send money from or request money from. Do you get ATM surcharge fees? Discounts, rewards. Like I said, are there any discounts on those accounts? Are there any rewards? I know some banks, I mean, I can't speak for all, but I do know that Truist offers cash back on your cash, meaning I know that I'm probably going to go to Dunkin' Donuts once in a week. I'm probably going to go to Starbucks. So I can actually click on some of our rewards, and I'm going to use my debit card to make that purchase. So when I swipe my debit card for my Starbucks, it actually puts 10% back into my account, and it does that every month. So little things like that, again, that's just another way to get money put back into your wallet. You know, if there's a way to put money back into your account, do yourself a favor. And if you're not sure, ask the questions. Unlimited free check writing. Do you get charged for your checks? Do you get charged for your official checks or your money orders? Those things, your bank may offer a certain account where you can alleviate those fees. I know at Truist we have, you know, accounts that do that as well. So, oh, okay. And then parts of a check. I'm sure most of us know this, but gosh, we haven't wrote checks in so long. Maybe we don't. Jackie, when's the last time you wrote a check?
It's been a while. Everything
I know.
online now, right?
Me too. It's been some time. This is always fun with my high school students that I have to talk to, because they're like, "What's a check?" I had one of my coworkers said their child was like, "Dad, does the mall take cash? Because I only see people with cards." Fair question, fair question. So I'm assuming, you know, seeing a check is probably just as, you know, foreign to some, but this is what a check looks like. So when someone asks for your account and routing number, if you're not sure of those, you can find them on checks. The account number will be to the right, the routing number will be to the left, paid to the order. You do have to write out the amount of check with the correct amount of zeros, those things, because if not, they won't be able to cash them. Person or company to whom you're writing the check to, the date it's written, check number, amount of check, and your signature, which is kind of funny because they did away with cursive. So I don't even know how people sign their names anymore. That's crazy. But yeah, that's where you would put a signature. And hopefully you have something that you sign, or some way you sign. A character, an X, something. I've been working with some Afghan refugees, and of course they know Dari, but they don't know the English letters. Their signatures are absolutely beautiful, but some people are like, I don't know how to do a signature. So we had one lady who just signed as an X, and we had to accept it because that's her signature. So yes, you could even write Bob Dole if you wanted to. If that's your signature, that's your signature. So I guess you can create your own character. Overdraft protection and overdraft coverage. This is an important topic because when we talk about banking, I talk to audiences. Some people have a fear of banks because sometimes through fault, we are taught banks are bad, they steal your money. That is not the case. I know even my parents, because they were not financially savvy, had that same, you know, feeling with the bank. Oh, they're taking my money. No, that wasn't the case. Now I realize that wasn't the case. My mom was just spending more money than she had in her account, and she was racking up on fees. So let's talk about that that uncomfortable conversation of overdraft. All right, an overdraft happens when you spend more money than you have available in your account. When you deposit a check, you must wait until the amount posts to your account before you can spend it or pay bills. And what they mean by post means that it needs to be deposited to your account, fully deposited. Overdraft protection is a service where your bank transfers money to your checking account to cover a transaction. There is a fee for using the service. Avoid the fee by depositing or transferring funds before the cutoff time on that same day. So what that means is, if you know your electric bill of $230 is going out, you didn't have $230 in your account, so the electric bill went out, $230 went out. They were going to charge you a fee for that, but you did a cash deposit that same day before the cutoff time, you will avoid that fee. Overdraft protection is best used for emergencies, as fees can add up. I always suggest to my clients to select the overdraft protection. And what that means is when you swipe your debit card and you're getting Starbucks. Starbucks is roughly $5.35 for a grande. Don't ask me how I know this. May have a couple of grandes every once in a while, but $5.35. If I only had $4.80 in my account and I swipe my debit card for that $5.30 purchase, it will actually decline. It will say, nope, not happening, not enough money. That's because I have the overdraft protection on there. What it will not help with is if you have automatic withdrawals. So I have set up my electric to go out automatically. Your electric bill will still go out even if there's not enough money, because you have given permission and said there will be money there. So hopefully that makes a little bit of sense. Again, if you have already basically postdated a check for your electric and said, hey, this is going to go out, it's going to go out. You will accumulate a fee if you don't put enough cash in there that same day. But as far as the debit card purchase, it will decline you if there's not enough money. So does that make sense, everyone? I'm hoping it does. Sorry, I'm having a random cough attack. Oh, overdraft protection and overdraft coverage continue. So overdraft coverage is when the bank will consider covering transactions when there is insufficient funds. Many banks will charge a fee for each item presented for payment, with a maximum total charge per day. Small amounts may not have a fee. This policy varies by bank. Be sure to check. If you have overdraft protection, overdraft coverage, overdraft protection will kick in first. Okay. All right, and then there are, excuse me, examples of overdraft fees, return fees, maximum number of overdrafts and return items. All of this varies upon your bank and their discrepancies. So again, this is just an example for you guys just to look over really quick. Any questions about what we just went over? Okay, perfect. Just want to make sure. Check cashing, depositing checks, and prepaid debit cards. Check cashing stores and payday lenders usually charge fees that range from 3% to 5% of a paycheck. It is a vicious cycle. If you have never done it, please try not to do it. It is such a vicious cycle. Don't have this, cash checking stores don't have the same protections as banks. They also don't offer tools to control your spending or put a budget together. That's because they want to keep you coming back for more, because they get a certain percentage. Check cashing, Truist checking accounts make it easy to deposit a paycheck to Truist personal checking or personal savings account safely and securely. And they may have a monthly maintenance fee, which can be waived depending on the account type, which I spoke about earlier. If you're paying a maintenance fee, check with your bank. There may be ways that you, per qualification can avoid it, and they can always switch your bank account to a different one with your consent. So if you qualify for a different, more exclusive account, definitely do it, especially if it will help you avoid fees. Truist checking accounts also allow deposits in person at the ATM or on your phone through your mobile app, with mobile checking deposits in 24, and it's available 24 hours a day. Okay. Check cashing, depositing checks, and prepaid debit cards continued. We also have something called the Truist Money Account Card. Many have the same features as a checking account. So you could actually get your electronic funds to deposit there, no problem. You can also have your direct deposit directed to this money account card. It is a prepaid Visa, so you can use it anywhere, but you can also load it at ATMs or at the branch. So it allows you to pay bills, purchase groceries, and make reoccurring payments. If for some reason, look, COVID took a toll on a lot of people. So we had a big, large population that overdrafted one too many times, and a lot of people's accounts got closed due to overdrafting too many times. This may be a second chance option for you. So if that's something that, is, kind of a pain for you, a pain point right now, maybe look into this. This could be an option. Like I said, this encourages financial responsibility because you can only spend what is available. So it is 100% foolproof on overdrafting. You cannot overdraft on this account. It will not let you. So it does keep you safe from overdrafting. All right. What do you need to know about the FDIC? The FDIC, the Federal Deposit Insurance Corporation, insures certain accounts for up to $250,000 in case a bank fails. 2, most checking, savings, money markets, deposit accounts, CDs, and IRAs are covered by the FDIC. Mutual funds, money market funds, annuities, treasury securities, stocks, and bonds are usually not covered by the FDIC. Same with Bitcoin and things of that sort. So we always have that question. If we can talk about things like Bitcoin, we cannot. It's not FDIC approved. So it is one of those risky things. Questions. 1, Mary has a checking account with $1,000 balance and a savings account with $20,000 balance. Is her money insured by the FDIC? Yes. I'll go ahead and give you the answer. Yes. John has an IRA with $150,000 and $200,000 in combined deposit balances. Are his funds insured by the FDIC? No. They're not. Okay, budgeting and savings strategies. This is kind of the fun part. Okay, 3 main budgeting strategies. Your budget is a map and your buying and saving habits are directions. If you pay attention to your directions, you'll get to where you're going. So the biggest factor in budgeting is control your spending. 2 is managing your debt. And 3 is saving for your future. Budget strategy number 1, control your spending. Make sure your budget's real and reasonable. You can also consider ways to make more money. Cutting costs is usually the easiest way to increase your disposable income, and periodically check up helps make sure you're getting the best deal and are a great way to cut costs. Insurance, cable, cell phone, internet, and other regular service providers. Another great fun fact is Truist is one of the main insurance brokers in the world, and they do any kind and every kind of insurance. You do not have to bank with us in order for us to help you get quotes on car insurance. You guys, I despise shopping for car insurance, especially in South Florida, because rates are always going up. So if you are considering having to do that, maybe yours is renewing or up for renewal, but it increased and you just kind of want to shop around, you can have one of our bankers do that for you. Again, it costs you nothing. They will just give you a quote based on obviously your information that you provide with them, and just a simple call and they'll get that information and get your quotes going for you. So if that's something that you're interested in, feel free again to send me a private message in the chat and I can get that for you. All right, budgeting strategy number 2, manage your debt. Another strategy when creating a budget is to set aside funds to pay down your debt. Reducing debt can increase your credit score, which is an important part of your financial life. A good rule of thumb is to use 10% of your monthly income to pay down debt. I'm going to say that one again. A good rule of thumb is to use 10% of your monthly income to pay down debt. If you can, pay more than your minimum to speed up your progress. So I maxed out a credit card when I was very young. It was $1,000 limit. And I had no knowledge of what it pertained to have a credit card, what was responsible, what was not. And I maxed it out, but I was only paying that minimum balance. And then I got the bill and it was like $1,600 that I owed. And I was like, how is it $1,600 when it was only $1,000 limit and I've been paying? I had no idea how that worked. So obviously I had to have a meeting with somebody who understood what they were doing, and they were like, you've got to pay more. The interest is accruing. That's how I learned about interest. That's how I learned how to manage credit card debt. That's how I learned, unfortunately, what I was doing wrong, and how to correct that. But if you can pay more, definitely do that. And I almost got sidetracked. I almost went off on a tangent talking about credit, but that is also important. When people ask if I can help them, get their credit in line, the first thing I have to do is talk to them about budgeting, because if you don't know how to manage your money, you're still not going to be able to pay those bills on time. So this is still very much a need to know topic. So just, again, bear with it. All right. And budgeting strategy number 3, save for your future. Put 10% of your paycheck into an emergency savings fund. So we have 10% of our paycheck going towards paying down debt. And then we have another 10% going into an emergency savings fund. Set aside money for a new home, car, or other big purchases, and contribute to a retirement fund with automatic contributions every pay period. That also helps alleviate some of those taxes, because IRAs, 401ks, those things, they're tax write-off. So you could actually be helping yourself. 1, you're prepping for your future, and 2, that helps come tax season. So set up a college fund for your children. That's important. As a first-generation graduate, no one prepared me for the amount of money that I would spend on college. And so I still have debt. I have student loan debt. So if you have the ability to set up a college fund for your children, that would be one of the best gifts you can give them. But if not, hey, it's understandable. And look, myself, I didn't have that and I turned out just fine. You learn to manage. So how much can you save? Use the chart below to see how much you can save each month and accumulate in 5 years. So savings each month for a year. So if you're saving $10, you have a yearly savings of $120, a total savings of $600 for 5 years. If you put aside $50 each month, your yearly savings will be $600, and your total savings after 5 years will be $3,000. So if you save $20 every month, then you'll have $240 for the year and $1,200 for the 5 years. All right, simple interest, understanding interest. There are 2 types of interest. Simple interest is money earned on your original deposit amount. Compound interest is when the interest you earn is added to the original deposit amount. Simple interest earnings 1% annually. So year 1, we'll start savings at $100. So the annual interest rate earned will be $1. Total interest earned $1. So your total value of a year will be $101. 5 years, you'll have $100, basically $105 total value. Compound interest earnings 1% annually. You have year 1, $100. Annual interest earned is $1. Total interest earned is $1, valued at $101. 5 years, you'll have $104.06, $1. Total interest earned will be $1.04. So you'll end up with 105.10. So I know this is like, what did she just say? Basically, it's the compound interest, simple interest is a reflection of your savings account. Have you guys ever been like, why did my bank just give me 35 cents? It is the simple interest, the compound interest earnings. So that's why they want to keep your money in savings, because you are accruing interest. You are giving back into how banks work with the money that you put into savings, the stuff that we can help with. We actually are able to allow companies to build their buildings, because that's kind of how credit cards work. If you're pre-qualified and somebody gives you $1,000 credit card, that's somebody taking a risk on you. So again, I know this might sound a little bit crazy and a little bit much, but it's good to go over some of the things that we may not really know. Strategies to be a successful saver. 1, pay yourself first. I said that in the beginning. It's as important as your rent or electricity bill. 2, set up an automatic deposit into a savings account. What you don't see, you won't spend. I always offer advice to set up money coming out of your account. Every time you get paid, have it automatically come out. I know at Truist, we can actually make our savings account invisible on our app. If I don't see it, I certainly won't miss it. And it's harder to go and make a transaction, because then I have to go to the ATM, or I have to go in and talk to a banker and say, hey, can you move this money from my savings into my checking? So I'm less likely to dip back and forth on checking and savings. 3, start as early as you can, especially if you have long-term savings goals. I think we're almost done here. Savings goals and planning. What do you want to achieve? What are your financial goals, and how much will you need for your goals? So saving options at most financial institutions. Where can your money go? 1, savings account, which is best for short-term or mid-term goals. Health savings account is best for medical expenses. And IRA is best for long-term goals like retirement. And then we're done. We'll talk about building and repairing your credit maybe on the next one. I'm going to now open it up for questions. Hopefully I didn't do too bad. I didn't bore you to absolute tears. I know it's a whole lot of information, but I can't really skip over too much of that.
Thank you, Kristina. Does anyone have any questions they could ask, or if they feel more comfortable in writing it in the chat, I'm happy to ask for them.
Hi, I actually have a question. Great seminar, Kristina. My name is Lori. And do you have any advice on budgeting when you get paid bi-weekly, just figuring out what bills to pay and when, so you're not paying bills all throughout the month and you could budget easier?
So in order to do that, you're going to have some type of savings, because if you're trying to get all of your bills paid at one time, which is feasible, hey, I like all my bills to go out on the first of the month. That way, I can have a little bit more wiggle room towards the end of the month. In order to do that, you can do one of 2 things. 1, you can pay in advance and then say, hey, I want to start getting these bills paid on the first of the month, but you'll have to do that in advance thing. Or have a conversation with your electric bill, whoever you use, FPL, and say, hey, I would like to, redo the date that it comes out for this date. This works better for me. I mean, really, you have to have that conversation with whoever your bills are coming out. But in order to budget for that, you're going to have to really hone in on that savings piece. So where can you wiggle? Where do I have money that I can kind of move around? And that's where it's important to write out all of your bills, when it's coming out, and how much are you spending on things that you don't realize. How many of us have avoided looking at what we're spending at the gas station. I know I have not calculated because I will probably cry, but I can't do without, I'm on the road. So it is what it is. So again, it's vital for you to write out what you spend on a monthly basis and figure out where you can really wiggle that room so that you can start saving money, so that you can do advance payments. So, hey, I want to go ahead and advance pay so I can start from May 1st. I'm going to have all my bills come out that first week. That way I have the second pay period that I can wiggle a little bit more with. Does that make sense?
Yes, absolutely. It does. Great. Thank you.
You're welcome. Any other questions?
If nothing else, Kristina, if you want, I know you said you would share the budget sheet with me that you presented.
Yes, absolutely.
So I'm not sure if anyone messaged you directly, but if not, I could send it out to everybody that registered as well.
I did not have anyone mention it in the chat or to me directly in direct message, but I will absolutely send that. It's always great to have it on hand anyways. So I can definitely give that to you.
Okay. And then also for everybody else, I'll put in the chat as well our contact at Rales Jewish Family Services. So I will put our website, and if anybody needs anything, we offer financial assistance, mental health counseling, career and employment services, senior services. So we have everything as well. And I know Kristina works closely with our career and employment services as well, which is how we got connected. And again, you have been absolutely wonderful.
Oh, absolutely. Anytime. Thank you guys so much for sharing your evening with me. I really appreciate it. And like I said, hopefully I didn't bore you to tears. But I also definitely realize that talking about finances is a little bit taboo. So I understand for those who are quiet on the line, and just know that you can reach out to me personally and we can kind of discuss what, your options are. And if you need a little extra help, that's what we're here for. That's what we do. So I appreciate your evening. I appreciate your time again, and I look forward to some other meetings.
Yes, Kristina will definitely be in touch. Again, thank you so much.
You're so welcome.
Thank you, everybody, for spending your Tuesday evening with us.
Yes. Have a great night.
Thank you.